just because there we go. You should have got a little pop-up. I just didn't want to have about 5 minutes of dead space at the beginning. Because I did turn it on so that I don't forget. I'd rather have 5 minutes of pause than spend 5 minutes of trying to recall everything we talk about. Because usually it's, we just kind of set the stage and set the tone, and there's just a lot of good things that we kind of cover, in the first 5 minutes, as we just kind of check in with each other and just kind of see how the week went, and how your trading went, and then any Q&As up front. I do want to introduce one other tool today. You'll have some homework with that, and I do want to look over some trades that you guys have done, and we want to kind of peel the layers back to just identify, hey, that was very strong, very good analysis, excellent work, and maybe we'll identify some other things that we want to consider, because maybe it didn't work out the way you wanted it. So both of those. So that's kind of our goal today. But Eric, what's different this week? You got your back trading going up this weekend. Anything you want to kick us off with?
Yeah, I'm doing okay on it. Finally awesome. Got that house pretty much done. Finished up on it today, but yeah, I've been able to do some back trading and looking pretty good. Just following the 10 EMA and a VWAP and the 20-50-100 lines, and it's watching those, and it's been working pretty good for me. So doing some back trading, and yeah, just following those guidelines, and crossing my fingers, and it's been going good so far. I haven't had a lot yet, but I have, I've done probably about six.
That's a start. It's going to be our consistent progress every week that is going to get us there. So that was good to hear. You really kind of blessed me when you called me. I think it was Monday. It was yesterday or Monday, just to kind of work through a couple things. So I mean, because stuff like that fires me up. So again, you guys just know you can reach out to me anytime, and if we can redeem the time and help you work through something. So that was just a 5-minute call, and then he was going 100 miles an hour. But I was just excited to see where he was at with that. So very good. Stacy and Nestle, looks like you kind of did do some VWAP analysis and kind of looked at the charts. It sounds like that was very positive for you. I'd love to kind of hear really what your experiences were with that, because just understanding why that is significant, it is a powerful tool. I think we highlighted that some folks, there are some professional traders that state that they just solely rely on, that's their only indicator. And then when we do look at some of these high liquid stocks and understand, hey, there's some consideration with large institutional, activity out there. And if that's true, it does bear strong witness to why the price does interact with the VWAP the way it does. So I just thought it was a great study myself, and I really wanted to share that with you. So what was your takeaway on that?
We looked at a ton of regarding the VWAP, because that's mostly what I am back trading and like paper trading with the open market. And it was really interesting to see how, when the VWAP is down at the bottom, and sure enough, when those candles start going towards closer to the VWAP, how you can see, okay, it's getting closer to the VWAP, and especially if a candle hits that VWAP near a support, like clockwork, it starts going long, and just the opposite. If that VWAP is now kind of up towards resistance, and those candles are especially passing through that VWAP near resistance, it's an opportunity to go short. It was interesting how, like, I would see certain things, Esley would see certain things. It's like, oh, look at how close these candles are, and it's the resistance. No wonder there was, no wonder it pivoted and went long. It was it was pretty cool to see. I caught myself wanting to trade only that. And I thought, no, that's not our plan. You know, that's an indicator to add to the 10 EMA. So we just kind of had to remind ourselves, let's still look for that bear candle, you know, above TMA, 10 EMA or the bull below. It was interesting, especially when we combined those with some of the other indicators that we've been talking about, like the 10 EMA crossing through the VWAP and different things like that. It was like there was definite knowledge there to add to the other indicators. I feel like when we first started to look at it, I didn't quite get it. And then certain things were sinking in. We went back and we listened to the end part of our call from last week, where you said the institutions, when it hits VWAP, short it. When it comes down to VWAP, long it. I lost my train of thought, but we re-listened to it. We realized that certain, you know, the VWAP, when it's near support means something, when it's near resistance means something else, you know, and to combine that, it was interesting. It was interesting. We could definitely see the trends when we were looking at it.
Yeah, and that's really what I hope to accomplish last week is just, again, it's when we have, you know, multiple indicators, you know, all kind of converging and saying the same thing, you know, that increases our probability to win, because that's what we're after. You know, we can go through these lulls where we don't follow our rules, you know, and you know, again, because sometimes you'll see candles go right through VWAP, you know, and they won't even slow down. But it's just an amazing of how frequently, you know, there's going to be, if it does break through it, that price will come back down and retest, you know, and then ultimately go back up, or you know, that consolidation and retest, that activity that goes around that VWAP is just, it's eerie, cool, you know. Yeah. What I mean by that, because, and that's one reason I just really wanted to make sure we really had a good understanding, because you just, you know, when you see back trading, you're doing back trading, you hear like Jeremy, you know, really reference to a lot. So now you guys know why, and you know what some of the what makes up that VWAP and why it is significant. You'll never be the same just by understanding that. I do believe that is a very foundational tool, because VWAP, you know, support and resistance, we talk about how important that is. We want to find those free areas between support and resistance, and momentum rides, you know, ride that momentum from a point of resistance up to support. I'm sorry, from support up to resistance, vice versa. And to understand that VWAP, you know, we may not have a line that we drew pre-market analysis, you know, where known support was or resistance, but all of a sudden that VWAP is there, and that is it's another support and resistance area. Just something we really got to consider, you know, when we're going through our trades. So it sounds like a very, very successful exercise for the week. So that just becomes part of your DNA as in your new profession now, to work that. Any questions, Eric, on the VWAP? Did you get a chance when you were WAC trading to kind of exercise the same?
Yeah, I kind of cut it out and then put just the VWAP on for a little while and was keeping an eye on it, but I pretty much got them all up. I got the VWAP and the 10 EMA and then the 20, 50, 100, 200. And just watching them all run together and see how they're working together. And now I got a VWAP on mine, it's got a green line on top, a blue in the middle, and then a green on the bottom. So I'm kind of going on the blue one in the middle.
Yep. Yeah,
Uh,
your settings in TradingView, those are just your bands, and you could toggle those off.
Okay.
And you can Google a lot of YouTube videos out there of kind of what they mean, what they're for, and sometimes, you know, it's within the bands, you know, where you see a lot of that price activity. And when you get a breakout above the higher band, you know, that or it retests down to the middle, then back up through the high band. Some people say, hey, that's bullish. You know, I come and retested the actual VWAP, the middle, and it went back up and kind of candle closed above that upper band, and very bullish sentiment there, you know, and vice versa below. So a lot of different strategies and stuff that you can leverage just on the VWAP. You know, and again, just even with the 10 EMA, and that is our focus, because that is I think the primary means that we can take this group, you know, and get you consistently profitable in the shortest amount of time. And by all means, you know, track trade any new strategy you have, you know, do it hundreds of times and log it. And, you know, just the hammer candle, you know, are there some hammer candles better than other, but that's a very powerful strategy to add, you know, to your 10 EMA. And I think through boot camps, you've seen Jeremy, I think a lot of times, you know, kind of talk about buying above a candle that kind of makes a new pivot point, you know, low area, and kind of buying above the candle. And he kind of just shows how easy it is to try to make a little target from that. So again, don't not every hammer candle is created equal, you know, but those are definitely things that you want to back trade and define your set of rules that you will not compromise when you're using real money. And that is your shortest way to consistent profits and protecting your bottom line over. So very exciting, because you got to see a lot of that. Because what I want to introduce real quick, and I want to introduce it before we start analyzing your charts and going over it, because we can even kind of look at it and to see if that would have made a difference, you know, in the actual trades that we're going to look at. But real simple, I'm going to go ahead and share. Okay. I've got PowerPoint first. You guys see the PowerPoint? Is that what's being displayed?
Yes.
Okay, so I'm learning how to use Zoom and not share a specific app. Okay, I want to just kind of talk about, you know, because last week we just looked at the VWAP, we understood it. And again, I don't know if I really answered your question at the end of last week's call. We kind of rushed off because we got the back trading going on, but you kind of had, hey, a pre-market analysis type question, and I touched on quite a few different areas, you know, from the post session time frame, and you know, we got the pre-market, and we're kind of considering, you know, what is the volume, what is the high and low of the pre-market. You know, that's after we kind of start drilling down. We really stop at the top level, you know, at those daily charts, you know, and we ask ourselves, hey, what's the SPY saying, what's the Q, you know, and then we go to the daily chart on the individual ticker that we're wanting to trade, and we got the previous day's high, previous day's low, and then we go into that. Then we're putting those lines on for support and resistance that is relevant to our current price, you know, that could span, you know, a few days to a few weeks. You know, if it's you know, $50 down on $100 stock, it's not going to be relevant for my day trading activity today. And then we went into that pre-market, and we talked a little bit about, hey, consider that pre-market low and pre-market high, because a lot of times you will see if the session opens, it'll open a little bit higher than maybe what the pre-market low was. And then when you see it come down, a lot of times there is your support of the day right there. That may be your low of the day if it's a bullish day. If it breaks through that pre-market low, and maybe it's already been through the previous day's low, Well, that's another very bearish sentiment. You know,
Okay.
so that's, I hope I finished answering that question
Yeah,
here.
that's helpful.
Yeah, because another reason I wanted to introduce the moving average into this conversation this week, because it just kind of continues that theme. And it's another exercise to utilize like you did with the VWAP. And I'm actually gonna show you what I mean by it. We can almost pick any stock and we're gonna say, wow, look at the relationship between a 20 EMA and a 200 moving average. And we're also going to toggle on the 20 EMA and simple moving averages both, because they really are similar, and that's going to be a preference. I find myself utilizing a 10 EMA with a 20 simple moving average cross. That's one indicator. And then, but I'm always looking at the relationship of that 20 simple moving average to that 200 simple moving average. That is, to me, pre-market analysis. And then because I'm looking for direction, you know, with the momentum. So when the 20 moving average, you know, starts breaking away, it points away from the 200, there's momentum. Okay. And so, and then I know it's only a matter of time that 20 is going to return back to the 200. Okay. So, but when my 20,
You mean like physically, like if a 200 is down here and like a 20 is like physically different.
exactly. Here is, I'm going to annotate here. This is my 200.
Okay, the green.
The blue, I'm sorry.
Oh, well, I don't have my glasses on. So
Oh, okay, it's
I see
turquoise,
that
the
line,
light
that's
blue,
fine.
the one by itself. So there's the 200. I'm actually gonna change color. I don't need to be doing. We'll call this is the 200. This green line is my 20. My
Oh,
two
okay.
looks awesome, does it not? That's terrible. I don't know how people write with a mouse. Okay, 20. All right, so the red is my 10 EMA. If you see that on any of my charts, know that my red is always there. That's my 10 EMA. Green is my 20 simple moving average. What I really want you guys to, this is going to be so cool. You're going to love this. Let's actually even just go back to June. We're just going to go through each day. I'm going to show you how each day, just looking at these two things, how they traded. Okay, here's June 3rd. Okay, I'm going to kind of spread it out. Not every day do you have good trades, but trying to clear up some of this clutter here. Notice this is not the most beautiful day to show it, but everything is staying above the 200. But here's May 3rd. Oh, I went way back, didn't I? Okay, very bullish, exploding away from the 200 SMA. So green 20 pushing away from the 200. Very bullish indicator. Okay, it's going to come back. That's the takeaway. This is not beautiful because whenever we're trading up and down through the 200 SMA, you are choppy. You're not in a trend. So very key to recognize that. When you do have your 200 SMA, simple moving average, or even exponential, when your candles are going up and down through that, you don't have a trend. That's the takeaway. It's time to probably look at another stock, do some back trading, wait for this 20 to move away from the 200. So here's another good one. So we have a gap up. We're starting to look at Amazon. Here's back on 10 May. But again, notice how it started here. We're close to this 10 EMA. And a lot of times on my pre-marketed charting, I will grab this little box here and I will kind of capture the last maybe hour of the previous day session. And all I'm looking at is, hey, what's the relationship of my 20 SMA with my 200? Are they close together? Are they running? Is there space between them? When there's no space between your 20 and 200, it's choppy. This is a trend all the way up through here, but this isn't really very common. But if you was to buy low here, then you sweat all day long every time it comes back down into your, taking your profits. It wasn't a real strong momentum, but this is truly a trend. It's kind of an upward channel would probably be a better way. You do have higher lows and higher highs, so there's a lot of opportunity there. But what I really want you to take away this week is notice the 20 shooting up away from the 200. Eventually it's going to come back down to the 200. Always does. Okay. Is it going to consolidate and continue bullish, or do we have, so again, this is at 5:30 in the morning. It opens up right here, but green candle. So you got your 200 above. It kind of gaps up above your VWAP, but within 6 minutes, it kind of peters out. So it comes down and retest the 200, but it actually goes right through it. Okay, so now I've got really from 5:42 in the morning, I'm below this 200 SMA clear up until, through the rest of the day. That's in a 3 minute, this is 6:18. No, I guess it does break through. This is the same day, May 15th. Yeah. So it stays through here. But look how the space, this 20 versus this 200. It's going to come back to the 200 eventually. Once your 20 simple moving average is no longer pointing upward, you are not in a upward trend anymore. This could be sideways, it could be consolidation and could continue back up, but we got to be very cautious after one high, and really you can look at 1, 2, 3 waves, and we just quit making newer highs here. And now here is what I really want you to take away. Again, look at the space. Let me get my little pencil here. This space right in here. That's where we got to start considering within our time frame that we're studying the separation between the 20 and the 200. If you got a lot of space, start considering taking profits. You're having a hard time breaking out up here. You're getting some wicks. There are a lot of bull candles. But what I really wanted to pause and look at before I enter another trade or consider taking profits, I want to understand this relationship between the 20 and the 200.
And is this on a bull trade?
Once, if my 20, this green line is pointing up, absolutely. That is my easiest way to know what my trend is on this scale that I'm in at that moment in time. I don't want to be long if my 20 SMA is pointing down.
Right.
A 10 EMA might pull down a little bit and just be a normal consolidation or retest. But even then, we're a little cautious. If we look at, a great opportunity here. This is actually opening session right in here. If we were to get in at 10 EMA right here, okay, it broke above this bear candle, come down and retested the 10 right in here. Everything is just bouncing and riding the 10 EMA. 10 EMA, again, that space between the 10 and the 20, I will stay in the trade all day long if my spacing between the 10 and the 20 maintains its integrity. Here, when my 10 does cross through, but it just comes right back up. You know, so now I'm watching, hey, if I got 1, 2, 3, 4 red candles, bear candles coming down, 2 of which did close below the 10 EMA. I'm a little nervous because how many times do we see, you know, like today's a good example. Once it breaks out here, it's gone and it goes fast, you know. So again, that's why we'll look at, if we enter here, once these green candles, bull candles come in here and I kind of clear this area, well, I'm looking at probably moving my stop up into about this area. I'm adjusting that pivot. When these bull candles come in here and kind of clear this area, start making a new high, well, now I'll be looking at probably adjusting my stop even a little bit more, you know, and I don't want to make it too close because you really don't need to exit the trade here. But my 10 now is pointing down. It crossed through my 20, but then it went back bullish again. But I know I'm probably not going to get another one of these or too many more of these opportunities before it decides not to go back above the 10 EMA. And this is what we really got to look for on our trades. You know, there's just 1, 2, 3, 4, 5, 6, 7 candles that all kind of wicked right in a very, very narrow price range. They just couldn't go up anymore. And then our 20 SMA, you can see how it's a little delayed, but it is flat right here. Okay, what makes it flat? Well, it's this little bearish run right here. Okay, we usually don't have to panic because once you do break below it, there's going to be another retest. This is what becomes magical because, you know, here's a double top here. Here's a lower high. I'm done. If I didn't get out earlier, here's where I'm making sure I'm taking profits. Okay. But again, lots of space between my 200 and my 20. It's pretty narrow right here, but that's the end of the session. Next day, it blasts up away from the 20. So now I'm thinking, hey, I'm thinking Amazon's bullish, but again, a lot of selling pressure here. And I'm like, look at the space already with my 200. I know that it's going to come back down and test it eventually. I don't know when, but I'm very cautious to go long on a breakout like this above the 20, you know, and that becomes pretty simple. All these bear candles, a lower high, lower high, lower high, and the space down to the 200 is getting narrower. It's getting taken out.
I'm always leery, like at market open, when it has that jump like that, and it's so much above the previous day's high to continue to go bull. I mean, sometimes I miss out on, you know, on certain profitable trades, but I feel like more times than not, it has a more immediate retest. And so I wait a little while for the market to even out, I guess.
And that's,
you know what the term is.
Yeah, you're talking like kind of a seasoned trader in a sense, because a lot of, if the gap's too big, it goes up there. A lot of new traders, oh, it's going to go bullish. I'm going to ride it up. And next thing you know, a bunch of selling pressure comes in and your high of the day was made in the first 15 minutes.
I see that a lot, actually.
Especially this past week. And so if you've got a short bias, yeah, you're not even worried about missing a trade on the opening range breakout where it does go up for the first few minutes. And
yeah,
not all of them do that, but yeah, but that retest is definitely common. You want to wait for the retest, and then if it does, all your other moving averages continue pointing up. Your 20 is still pointing away from your 200. You got a good bear candle that's closing above your 10 EMA. Well, then you're going to be okay. You know, because if we were to enter over here, well, we wouldn't have got wicked in. You know, leave us some good padding there. It's like, you know what, this could come down, and I am fairly close to the 200. There's nothing saying it couldn't, you know, go back up that way. But that's another reason we like to enter above the bear candle when we go long, and not at the bottom. Because if we go at the
That
bottom,
has saved me a lot of losses. I learned that last week, and it was like, oh, a light bulb went on. More and more information is stacking upon each other, and it saved me a handful of trades, both bull and bearish, that didn't like wick me in the trade and then go down, or wick me in the trade and go up, because I had set it the entry point properly now.
good job, good job. That's my real world account today, which is more important than the simulation account. That saved me today because I did get wicked on Amazon. It never did go back up above that one bear candle that I had my eye on, and it went down fast. And I was like, yeah, I just had my phone, walked around the house, and I just enjoyed it. And I actually got out a lot earlier than I needed to, but I did hit my target of the day, and I had to take my daughter to the airport. So if I would have got wicked in, I would have just got sucked down and lost my full R in less than 5 minutes.
Which I've had a handful of, so it was nice too. And I may still in the future, but you know, now I feel like I know where to place that entry point better.
That's very good. Double top here. We've talked about that quite a bit. You got a top there. It kind of comes down, hits the 200 again. Double top comes up here again. I like my double tops for the follow on to be slightly lower. Sometimes when they're a little bit higher, I'm not convinced that I've got a double top yet. Again, that's just my own personal observation. Definitely look at that. And sometimes it is hard to tell, do I got a double top or just a lower high? And both of them are very indicative that the direction has changed. So we trade them essentially the same way. You know, if I get a really textbook perfect double top versus a lower high, hey, I've got indications that direction is changing, which clearly it did here. Bounces off the 200 SMA, comes back up, hits it again, but then it decides to break through. Okay, so now, even here, I get resistance at the 200 SMA. I'm looking to go short here. Very, very comfortable.
So 200 EMA at a resistance is an indication to go short.
Oh yeah, that's the takeaway today. When you're above the 200, you are bullish. Okay, couple that with your 20 SMA pointing up. Now, even though the 200 is still pointing up, in this area, our 20, the green, is starting to come down. So that's where we want to make sure we're considering taking profits. When that 20, even though it's above the 200, it's coming down. I don't want to be long at that time. But when my 200 SMA, all my price action is staying above it and it keeps bouncing off or near, my trend is bullish. Absolutely. We don't have to even think about it anymore. That's one of the things I wanted you to take away from today. We break through this 200 here. Well, not only do we have a good double top, lower highs, but now I'm breaking through the 200, and I'm even below VWAP.
Yeah.
You know, and I got a candle here that's below the 200, another lower high. My trend is now bearish. Fact. We're not guessing. And then this is where we want to push away or start looking at another stock when we really can't get away from this 200. So here's the 23rd, the 24th, 25th, fairly tough. You know, we could spread it out. There are opportunities in there, but when you do zoom out in the middle of your day or whatever, just want to do some analysis. Hey, where am I at relationship to the 200? You know, and we could even be saying our 10 EMA relationship to the 200. It's really going to give you the same picture. When your 10 is close to your 200, you really don't have trend. When your 10 is pointing up and away from the 200, you have a bullish trend. When it is pointing down away from the 200, you have a very bearish trend. Now, when your space,
Pointing away is bullish. Pointing towards is bearish.
see, I got the red and the green, the 10 and the 20, opening session right here on Friday, the 26th May. My favorite condition is multiple consecutive green candles shooting up away from the 200 SMA. That's Jake's pre-market analysis. You know, I've done the top level down, but I really want to understand. And if I can see this type of activity, so I'm actually below the day prior, I'm below the 200. It gaps up above it. I'm looking to go bear long on this momentum when it explodes away from the 200 SMA. So here we're crossing the 200 again. We're bearish. 20 is pointing down. Now the 20 goes horizontal. 10 goes horizontal. Everything's coming back up towards the 200. You know, so I've got to consider be a little more conservative on my trades. You know, definitely probably done shorting. Once my green 20 SMA and 10 SMA were sideways, I'm taking profits if I was short. I'd have a very liberal entry point. If I did think I'm going to have another breakdown here, I would make sure I leave a little space so I don't get wicked in. And a lot of it, the reason is because look at that space. You know, it's not a lot of space. You know, you look at the space here compared to over here.
Mm-hmm.
But again, you notice how it came closer down to the 200 before it went further away. That's very consistent on a variety of stocks.
So it looks like also like the VWAP crosses down through that 200. Look at like it's very consistent. If you look at that VWAP crossing down the 200 also.
Yeah. So here opening, you know, again, it's like right when you see 5:30 on my screen is 9:30 Eastern Standard Time. So hopefully that's not confusing. So again, opening market here, I'm above the 200 the day before. You know, Amazon again been very bullish. A lot of support on the 200 right here. Consolidates right here. It breaks through this first green candle right there. It does kind of close the space, you know, closer to the 10 EMA. You know, you can get in a 10 EMA trade here and all day long, you're bringing in the R's. If you miss this right here, you know, you got two green candles right there. This is where we want to start looking left because, okay, I've got a little space for my 200, but this is where I've got probably a line drawn here, maybe a line here. And so do I have, you know, respectable risk reward, you know, because again, we don't want to be trading, going short and creating new lows of the day. And this broke down pretty hard, but look how vertical my 10 and my 20 and my VWAP are all pointing down away from the 200. And then your pre-market analysis, looking at your daily chart. Hey, has Amazon been very bullish? Is it due for a little pullback? You know, those are things to consider. So then down here, you see it's a lot of space away from the 200. It does gap up. It goes up and hits the 200, and then it does retest back down to the 10. What's very cool about this condition here is my 10 did work as support, and my 10 is above my 20. So very tempting. This goes back to your question. You're very hesitant when it kind of gaps up, but when you get these bear candles come down just to retest into the 10 EMA and it takes off again, not a bad trade. This little wick coming down through creating a higher low from your opening low. Now essentially you've identified your low of the day. So if you get in anywhere here and you've got a stop that's below this opening candle on this particular day, you can just ride it all day long. You're never going to get stopped out. But it bounces off the 200, retests the 10, and goes up. Okay, now I don't get another high from here. Everything's below the 20 and the 10. Everything's pointing down towards the 200. Okay, I even get a little single wick right there that it tests the 200 here. It tests the 200, and it's back up. So it's just another way to give you very strong information. Hey, am I trading the trend or not? Because if I'm close to the 200 and I've got momentum going either direction, up or down, you know your trend at that moment in time. When it slows down, in other words, your highs just start leveling out or your lows start leveling out, be cautious and recognize, hey, how far am I away from the 200? Is it going to come back? It will come back. Maybe not that day, but it will come back. So this is where a lot of people struggle. You know, when it is choppy like this, it's choppy.
Yeah.
It's tough. You know, so if you don't have clear spacing on your moving averages pointing in the same direction away from your 200, consider being extremely cautious, you know, or waiting until that all clears up.
And that's one of the reasons why you say pick a small amount of stocks to trade, because if this is doing that all day or for a couple of days, whatever, you can say, okay, this feels real choppy. I'm going to go over to something else, Tesla or
Right.
whatever.
And you've got your support and resistance already built. You've got your previous day high and lows already plotted, so that you're not going into a blind. Because again,
That's all part of like what you do in the morning is you do that for your 4 or 5 stocks. Okay.
Yep. You even do it the night prior. That all you have to do in the morning is just look at that and kind of study the pre-market session on your 4 or 5 stocks. I a lot of times will, well, actually, while I finish scrolling again, look at how it breaks away from the 200 here. You know, comes down to this support area. That was a fun trading day. Okay, now I'm away. I know it's going to come back up very choppy all the way back up to the 200. You know, I'm trying to develop myself to where I have the discipline. Hey, just wait until I get my moving averages all aligned, pointing the same direction away. And when they start cross, don't fight it, Jake. Let it go. Trade another day.
We were back trading last night and it was frustrating. There's nothing here. It's just all jumbled. And now it makes sense why it was like that. It was what you were talking about.
Yep. If you go in, I'm going to zoom in. So this is definitely all sideways, but you know, we're zoomed in here. We don't really know what's happening here. A lot of move. There's not even really a 10 EMA that goes on here. And that's another challenge with 10 EMA when the momentum is so strong coming down. Well, for the most part, all your price action was done, you know, before, you know, well, again, that's 9:30 in the morning. So that's 4 hours later.
Yeah.
But there really wasn't a rules-based bull candle closing below the 10 EMA here.
Yeah.
You know, then you get down here and you wait for 10 EMA, then we got to deal with this nonsense all day.
Yeah.
Because here I'm thinking, oh, I got a higher high, you know, I got a double bottom here. So I'm really thinking, you know, it's going to go back up this way. Because and this is today, yeah, because that was a challenge. Is that today? That was on. It sure was. It sure was. It sure was.
So go back to the day of market open.
Say that again, Stacy.
Can you please go back up to market open? I want to see what so did it open?
Opened, today is Wednesday, correct? Yeah. Oh, yeah, we're over here. I'm sorry. Yeah, good grief.
Oh, okay.
Yeah,
So it
so
opened, had all of that action. Okay.
so it explodes off the 200. And I kind of remember seeing that. I didn't actually get to my computer till around 6:30, right in here. And I'd seen a shooting up away from the 200. And I think I did get in right around here. I reckon when I got this shooting star, things coming out, I actually just got out at my entry price. So I actually did trade Amazon today. But because of this big green candle exploding off the 200, that is a very bullish indicator. These wicks made me a little uncomfortable, this shooting star, but these double wicks here and hammers, I'm like, I did enter, put in right here, it come down, wicked off the 20. I'm like, oh, this is going to enter. Sure enough, it come right up and I got in right here. But I actually had I think I had my stop down here about in the middle. So it was about 0.5 R, but I didn't, because of this high, I didn't get out. It was literally, I think I put my entry point, I moved my stop up to literally right here where I entered. Yeah, I entered right there,
It
and I
stopped
put
you
my
out at
stop.
your entry, so it was more like
Yeah.
a wash.
Yeah, so it was a free trade. And then when I seen this lower high here, then I started thinking bearish. And actually I got in, I think it's actually right kind of below one of these candles here. This little wick right here, once that come through, this was reverse. I entered right in here somewhere. I'd have to go in and look at I wanted to clear my screen so we could actually just look at 20 and 200.
Yeah.
But I didn't have a bull candle here. And again, something to consider when you have a bull candle close above 10 EMA, it kind of wipes out your conditions no longer met, to enter below a green candle, 10 EMA.
Right.
And so that condition wasn't met here. But when this support got taken out, I did get in. Again, that's not textbook 10 EMA, but everything we're talking about, we're below the VWAP.
Yeah.
EMAs are pointed down. I've got a ways to get down to the 200 SMA, and I no longer, when all these bear bulls got trapped with these red candles right here, I still utilized the bottom of a green candle as my entry point.
Yeah.
And even though this kind of nullifies, the pre-existing 10 EMA going short, but these are also very strong reversal candles, which then add me another reason to consider going short. Because these two particular candles right here, not only are they a lower high, but there's a bunch of bulls come in and the bears trap them right away. That very next candle, every one of these bulls are trapped. Okay, then there's a little consolidation, higher wicks right here. Everything's right above the VWAP. 10 and 20 are going horizontal. They break away. I'm like, I'm getting in on that ride.
Awesome.
Okay. Real quick, and I really want to kind of look at your shorts, but I'm just going to scroll quick again. Here's Tesla. Look what happens. Here, this was Tuesday. It comes back above the 200. All the way up into here. We're bullish. Now we start looking at the space. Going to be a little bit more cautious. Same thing over here. Again on the 23rd. Once it breaks below that 200, there's a lot of that trend is very solid. It's easy to trade when you understand that relationship between your EMAs and your 200. So again, that's your takeaway this week. That's adding one more very strong indicator and analysis to get that convergence that you want of multiple pieces of information to give you the confidence that you're in the right trend. And and your trading probability does go up. So again, as an exercise, just put a 20 and a 200 and do EMAs on both, do simple moving averages on both. It really doesn't matter. There are some times where the 200 moving average, just the candles wick right into it. There's other times where it is the simple moving average. So there is no one that is absolutely dominant and better than the other. And we have a lot of moving averages on our screen. When they're not applicable to our current price action and where we're buying and selling, we do just kind of hide them. The less indicators we have, the easier it is to really analyze what you got going on. But you want to be able to turn them on real quick to see, hey, do I got some support or resistance from my 50 that could be a play. So that's going to be your homework for this week, is just to kind of understand that larger moving average as it pertains to your 10 and your 20s. Very powerful, very powerful. So now I'm done talking, and I really want to look at your charts and answer any questions that you guys got. We got a few minutes. So you got something you'd like to share?
Eric, you want to go? I feel like I've been sharing the heck out of my trades, so I want to.
Sure. Yeah, I did a few today here. I'm
Awesome.
working on my tablet and not trying to figure that out. It's a little different than the computer. I like the computer so much better, but I saved something on my computer. I'm saving it on the tablet, but I don't know where they are. I'll figure it out.
Okay, and why he's bringing those up, a question for y'all real quick. Do you prefer us kind of going over your guys' charts up front early, or do you kind of want that objective, that lesson objective kind of up front, and then we can even talk about it as we look at your charts? What works best for your guys' learning styles?
Either way, it doesn't really matter to me.
It doesn't matter to me. Based on the lesson for the week, I think this was helpful to go over first, because we're learning a new concept, and then to look at what we traded and why we traded it, and see if this indicator also, can be traded. I guess it just depends on what the lesson is for the day.
Okay.
Or maybe,
Maybe
a trade, the lesson and a trade.
Fair response. I'm going to stop sharing so that Eric can, and then I need to set it up to where multiple participants. So you're free to go, Eric. I think you're waiting on me.
Yeah, here. No idea where to go.
On the share screen.
There we go. There we go.
Okay.
Share screen. Can we see that?
Not yet.
Not yet.
Get a little.
There we go. I think I got it.
Hey, it's coming up. Yep.
Okay.
Oh, we're seeing it. Look at that.
So that one, yeah, all looking at them all week, everything's just breaking out right away. I mean, just going bull crazy every day. It's nuts, and it's kind of like, what do I do? Do I wait? Or so on this one, I was just looking at the 10 EMA going along with the VWAP, and it came off right off the bat, and like, well, let's see what happens, and it went back down, and saw these bulls coming up and watching the lines, and I said, well, it's time to get in. So I got in, and I got 1.2.
Yeah, I was just crossing that where your 10 comes up through the VWAP. So that's excellent, Eric.
What stock is this? I can't see it.
Microsoft.
Okay.
It's right here.
Yep.
If you can see my little doodling.
Yep.
Okay. Here's a little observation, Eric, and it's something we touched on a little bit last week, and where this is bullish. It was Microsoft. Great direction with your 10 EMA coming up through the VWAP. Here's your kind of upper band of the VWAP. That's what he was talking to earlier. There's your upper band and lower band. This is kind of like what we call like a shooting star. This little red candle right there can make a little nervous from time to time, because for one, it's a little lower high than over here. And this is kind of has a lot of bearish sentiment, which again, so when we actually enter above that, if this bull candle comes up, it comes up, well, now this is a shooting star bear candle closing above the 10 EMA. You got quite a bit of space right here. It could do that pretty quick, where if you enter above the bear candle closing above the 10 EMA, it does kind of protect you from that fake kind of breakout, if I can use that verbiage.
Right.
So a little bit of concern there is you back trade and kind of look a lower high here, but this type of candle, shooting star, because a lot of times that's exit criteria. You know, if I've been riding a stock up for a while and it's like, hey, I've got 1, 2, 3, 4 bull candles in a row, and now I get this shooting star. A lot of times, if I'm up at 70-80% of a profit target already, I may be very aggressive with a stop and even put below that shooting star. Again, that's just a way. And again, I don't want to exit too early, but if I am 70-80%, you know, of my target, this did not make a newer high, you know, I may be exiting right there. So with your entry right here, again, this was an excellent trade. It turned out well. And even this candle right here is extremely bullish. And it worked out really well. But 10 EMA by definition, you want to kind of look at entering above a bear candle that closes above the 10 EMA. And we even like to see it interact with the 10 EMA if possible.
I was a little hesitant getting in right at the previous day high, and was thinking about going up above it. And I just kind of went with it.
You know, it's a way. You know, you got 1.2R, you got a hammer candle, and your 10 EMA. That's what's beautiful about 10 EMA too. Is if we do have very tight stops, and we've kind of got that bullish hammer, you know, next to that red candle. So you don't have a lot of space to go to get a 1.2R, and it worked out great for you here. It definitely did. Continue to back trade that and see what the frequency is of this type of, you know, 1, 2, 3, 4 green candles, and then kind of a shooting star lower high, and see if there isn't something to glean from that. Because there's a good back study just on this trade right here alone. This worked out great, but I would really I feel like I did a disservice if I did just kind of talk those few points right there, because there's a lot of opportunity here for it to come. And even though this is a bull candle, that shooting star lower high, and it could easily get wicked in and you're going the other direction.
I was a little hesitant on it.
That's why we
I
back
feel
trade.
you, Eric.
That is awesome. Say that again, Stacy.
I said, I feel you.
Yeah. You know, but it's fairly early, or you're talking, it's the first hour of the day. It's Microsoft. You know, if we zoomed out, now I'd have to look at the daily charts on it. So it's very tempting, you know, and it worked out very well. But there are some things to consider, because you'll back trade and you'll say, hey, how come I lost an R on this trade? And then for everything that we just discussed, that would be the conditions right there.
Right.
So,
yeah, I saw that shooting star, and then I saw that the hammer next to it, and then the 10 EMA and everything else is just going up, and I just like, well,
yeah, probably about 2 out of 10 times you're going to win right there. You know, because it will. You just proved it. You know, but I believe the odds on that one there is less than 4. I think I've heard like Matt DeLong talk about, yeah, usually when you're going in for those new highs, a lot of times too aggressive, you know, you're going to win, but maybe 2 out of 10 or 3 out of 10. You know, and you nailed it here. You know, great 10 EMA understanding, especially coming up to that VWAP. Very tempting, that's for sure, because it's going to move. It's going to move up a little bit. We just don't know how far. So very good. Very good.
And I got the Amazon one here.
So Jake, I may have to drop for back trading. I just saw the time.
It's 4 o'clock. Please do. I will get this video. Me and Eric are going to finish up here real quick. We'll get this video in the cloud and I'll get it sent to you guys tonight before I go to bed. And I'll be joining you in back trading here shortly.
Okay,
So,
thank you.
great-
Thanks,
great
Eric.
week.
Have a
I
good
enjoyed
week,
Thank you
guys.
so much.
Thanks, you
You
too.
bet. Okay. All right. So this is Amazon 27th.
Yep.
Okay. What I really like about this one, Eric, is you might have been, your entry might be like right in the bottom of the body of this red candle closing above the 10 EMA. But there's a lot of, you know, it might be just the placement of your long short tool, because that's really a perfect entry point considering this candle here.
It was
You're
still
above these two
kind of
candles
choppy
that-
though, you know, it was choppy and not really moving up much, but I saw how that 10 EMA is crossing above and it's just going up. So it's like, I think it's time to get in on it.
Yeah, that's actually a good trade. Now it's a very, very conservative stop here. And again, 10 EMA is momentum. And another thing I like about your higher band on your VWAP, you notice how everything does kind of ride up above that. You know, the wicks just wick right to the top part of that. You know, that is kind of a powerful indicator. So you have real-time data, you know, saying, hey, this is a lot of consolidation right in here. But it's actually kind of bullish consolidation. And then really you don't get your breakout on your 10 EMA until right here.
Yeah.
And then it's just 1, 2, almost got your target there, 3, 4, 6 candle. You know, so 18 minutes later, it breaks through right there. But this is beautiful, bullish consolidation. Nice little triangle right here that really originates from here. This is a big bullish move, retest. It closes a space down on the 10, goes a little bullish again, retest a little bit more to the 10, but consolidation. That's all this is right here, which it's building up pressure. You know, when you get consolidation like that, you should start really getting excited right in this area, because if it does go up, it's going to go up pretty quick.
Right.
The smaller these candles are, the more consolidation. It's just building up a lot of pressure.
Yeah.
So I really like that one. I really like that one, because your entry point is really textbook when you look at the actual price level. You know, if it was considering this candle right there, that's beautiful.
Right. And the other one I got Costco, or the 22nd. And I kept going after that just to see the next, you know, how things ran. So where it went after that. But yeah, I waited for it to, you know, we had a double top. Actually almost a triple top up there on the left.
Yep.
And then came back
Yeah,
down.
that's actually a great observation there. And where's your 10 EMA or your bear candle closing above? Just kind of looking for like what your criteria was to actually enter right there.
Well, you got I had the 2 hammers down, the green hammers down on the bottom, and they had that red hammer. And I'm like, well, let's see if it, you know, I get some more bulls coming up. And so I had the next bull engulfing that little one on the left and almost engulfing the one on the right. And it's just, I said, this thing's going to go up. And I was watching the 10 EMA crossing over I guess that's a 20. Yeah, right there.
Mhm.
And it's going up above the VWAP. And I said, well, it looks like it's time to get in.
Yeah, I really like, your indicators here. Again, you got your VWAP here in the middle. Look at how it's just working as a beautiful support. Only one candle went down below that and it shot right back up above it. And then kind of like you said, you got a little bearish but hammer candle right there. And then it shoots right up above that. Because here's really your first bear candle closing above the 10 EMA, a little bit of space right there. And then if you look at, where you're high here, and then I think this is the same day. So a lot of opportunities make that 1.2 R, even just fully, considering that 10 EMA strategy. Again, just first bear candle closing above the 10 EMA. But again, because what if this would have been hard support? You enter here, it kind of bounces off of that a couple times, maybe even looks like it's breaking through, and you get a big green candle there, and then you get trapped. Another red candle comes in and it rolls down this way. I've seen that quite a bit under these conditions. So this, let me clear this lines here. So this 10 EMA right here is still a little bit below this resistance. But when you look at 10 EMA, as you stated, everything above the VWAP, you've got everything pointing, giving you a lot of reasons to believe that, hey, this support is being weakened at this moment. So
Right.
you got the right stuff on there. Again, so if you enter here, you definitely have at least 1.2 up there. What you did, this was very successful. You cannot argue with success. You cannot. But I definitely want to make sure as we define
Wife on the phone.
plan.
Let me grab this real quick.
Okay.
Hey, honey. Uh-oh. Good. Yeah, I'm just finishing up with my class right now. Yeah, let me give you a call back in just a couple minutes. Okay. All right. Well, she wants me to make dinner. So.
Oh, man, you're a man of many
I
skills.
always make dinner. I'm the cooker in here. So.
Fantastic.
I'm the chef.
Fantastic. So yeah, as we define your help you define Eric's trading plan, which is going to be rules based, back traded. You're going to know what your win loss record is through back trading. The 1.2 or 1.4 R's, or do you just use other support and resistance? That's kind of the objectives of what we're after here, so that you're really skipping. You're making dinner in the evenings, you're skipping because you got confidence. You've got a process that is proven to be profitable through all your back trading. You got confidence, and it takes a lot of the guessing out and hoping and wishing, because we're really not gambling, and our probability of wins goes up when we are consistent, with the trading plan. So your plan very well may have the upper bands on the VWAP. It's absolutely valid. I'm going to check it out a little bit more. I haven't used it that much, but the two charts that you showed to me was very interesting on that upper band, how it really was impeccable support. So that's the kind of stuff we also discover, through back trading. You're going to come up with Eric's strategy, Eric's model, where you're comfortable. So outstanding, Eric. Be honest with you, that's exactly what the stuff we want to be doing. So,
Well, we'll see how it goes in the next few days. So maybe I'll get a hold of you before the next class and we can go over some stuff. But my wife's we're just finishing this house up, and we got tenants coming in Friday, and we're closing on a condo. So that's more work to do, but I'm gonna have my wife do most of that, but I gotta haul a bunch of stuff. So
all right. Well, sounds like you're a blessed man. Got a lot of,
and one more
stuff
week,
going
we're
on.
going to Mexico. So I gotta work on that tablet and figure it out, because I don't have all the tools in front of me like here on the computer screen. So I'm trying to find where they are, and they seem like they're hidden, but I'm starting to figure it out.
yeah, and it's beautiful. You can download that TradingView right to a tablet or phone, and just study charts and analyze them. Put up a couple, go up and use this. I'm going to go ahead and close you out real quick. I just want to highlight a couple things. Okay, you're still there. I thought I lost you
There
there
you
for a minute.
I lost.
Yeah, we did have a little disconnect there. Okay, I just wanted to highlight one thing real quick. So we're back to my screen. Oh, yeah. Because again, everything that we kind of talked about there, I just want to just again point out these, when you create your indicators the way you like them, and maybe it's going to be part of pre-market, or there's a lot of clutter on there, come up and save that as a template. Because I got my 10 EMA, I can click on just one. It takes the very first character and whatever I call it as. So basically, here's the indicators that I may turn on and turn off when I'm just working the 10 EMA strategy. If I want to look at just the 20 and 200 SMA with a 10 EMA, I click on this one right here. And so it doesn't really look different right here, but only the indicators that they're always going to be populated here that I could turn on and turn off when I hit this particular 20. And then I got this other one like Momo Trend and 10 EMA. This one's pretty cool. Just everything's, I kind of got toggled off just to. Actually, I think I got more network issues going on right now. Things should be turning on pretty quick. But anyway, just a good trick so you can create templates, and versus just having to manage. Let's say if you do have the basic trending view where you've got limited number of indicators per chart, well, you can multiply that by creating templates.
Okay.
Yeah, see, it's network's just running really slow, but I just clicked on like my Momo Trend and 10 EMA. So just Momo is a particular strategy with the crossovers, and kind of allows you to see trend a little bit better also. But you can really take and just multiply and save a lot of time. And once you build those templates, that's really what I want to get at. When you got your phone or tablet and you're traveling, if you have those templates already built, then you can easily on your phone duplicate what you would do on your desktop.
So I save them on my desktop. They're going to be available on the others then?
Yes, because
Okay.
you're logged in as Eric Steinmetz, whatever. If you got it downloaded on your computer or you're logging in via the web, it's the same account.
Okay, yeah, because you don't see it the same as on here. So you don't have the toolbar on the top and on the side. It's totally different on a.
Yeah, it's a little bit different, but your favorites and things like that should all be just accessible wherever they are.
Okay.
Based on if you got an iOS or Samsung, a little bit different. If you got a canvas is black versus canvas is white, that may be different on them, but once you build your templates and have your favorites there, they should be accessible regardless if you're on a phone or tablet or desktop, I believe.
Yeah, I gotta work on that this next week because on the 10th we're heading to Mexico. So
Oh,
I'll
very cool.
be on the
Well, have a
tablet.
very safe trip, and we'll do this again. I think 6th July, next Wednesday. Are you traveling or?
I'll be here.
You'll be here, okay. And
We'll
we'll be sticking right to an hour on that one there, because I think I will do the back trading course that Stacy dialed into, because Jeremy's going to be off the net next week, so I'm going to do some back trading there. So,
Okay.
Eric, yeah, don't hesitate to reach out if you got any questions. Let's keep this moving along, and regardless, we'll definitely meet up next Wednesday.
Sounds great.
Awesome. Thanks, Eric.
Thanks.
Enjoy the time.